Today, I'm going to show you exactly how to file your crypto taxes in Canada, even if your transactions are spread across 5 exchanges, 2 wallets, and mystery airdrop. By the end of this video, you'll know exactly how to report your crypto on your Canadian tax return. You'll know what triggers a taxable event, what doesn't, and how to file confidently. Hi, I'm Charlene Tessier, your Canadian crypto tax expert, and every week I help crypto investors file accurately and avoid CRA problems. This video is for educational purposes. Everyone's tax situation is different, so always speak to a professional about your specific use case. All right, let's dive in. There are 3 steps to filing your Canadian crypto taxes. And the first step, you need to know what triggers a taxable event. And spoiler, it is not just selling crypto. So let me start with something I see all the time from Canadian crypto investors. A client came to me just last month, totally confident that he didn't owe any tax. And this is what he did. He moved 100 USDC from his cold wallet straight into a Canadian exchange and immediately converted it into Canadian dollars. He said to me, "I didn't make any money. That means it's tax-free, right?" And it's a totally understandable logic, but it's wrong. And here's the truth. The taxable event happens the moment you sell your crypto for fiat, even if it's a stablecoin like USDC. And yes, that transaction must be reported on your Canadian tax return. It doesn't matter that it looks like 100 in and 100 out. What matters is the difference between the USDC buy price, also known as your adjusted cost basis, ACB, and the price when you sell it. And for Canadians, this trips them up a lot because they think a USDC stablecoin is dollar for dollar when it's not. So let's look at an example. You originally acquired the USDC at $1.28 Canadian and you sold it for $1.32 Canadian. And that's a 4 cents capital gain. And if you're moving $50,000, $100,000, $1 million worth of stablecoin, well, those small differences start to add up fast and the CRA expects you to report them. Now, let's go a little deeper into the common crypto transactions that get people tripped up, that people get tripped up on. And let's look at some of the moves and you tell me whether you think this is taxable or not. Wallet to wallet, same token. Guess what? It is not taxable. How about moving the same token from one exchange to another exchange? It's also not taxable. What about swapping ETH for BTC? Taxable. And selling BTC for CAD, that's taxable. So how did you do? Did some of those surprise you? And to be honest, that is just the easy ones. I created a free taxable cheat sheet with the most common crypto tax transactions, and you can grab that in the description below. And if your situation isn't listed, then just shoot me a message and I will point you in the right direction. Okay, let's move on now to step 2. Gathering your history without overwhelm. Now, this is the moment where a lot of people freeze because all of your crypto probably isn't stored in one tidy place. You've got Coinbase, Crypto.com, KuCoin, MetaMask, Ledger, and maybe a platform or 2 that collapsed and you don't remember where your records are. And your brain just goes, "Oh my goodness, where do I even start?" Or maybe you're thinking, "This is going to take forever." Or you might even thinking, "Hey, you know what? My records are a huge mess. I am never going to figure it out." And to be honest, all of these feelings are totally normal. But here's the truth. You don't have to go back to the very beginning of time for all of your crypto records. Just start gathering your crypto transactions history for this last year. That's it. Start simple. And this is where Canadian crypto tax software can help you with some of the heavy lifting. But there is one big caveat. You still got to check it, because you're going to be getting errors that have assets that show a zero cost basis. And sometimes this could be an easy fix. Maybe you forgot to import one exchange or a DeFi wallet just didn't sync properly. Other times it's going to be way more involved. You're going to have to maybe dig into blockchain explorers or look up historical prices. And if you can't recover the cost basis, it might actually have to stay zero. And that means you'll likely overpay tax rather than underpay, and that's okay. The CRA just wants your crypto tax filing to be accurate based on the information that you have. It doesn't need to be Perfect. And if you were impacted by a collapse exchange like Celsius, don't panic. I'm going to come back to this in this video in just a moment and explain what to do. But first, we're going to move on to step number 3, filing with confidence. And new clients ask me this all the time. Okay, do I need to fix all my past years or can I just file this year? And this is, and there is actually no one size fits all answer for this because there could be penalties, there could be refunds, there's risk of audit. It all depends on the timeline, the dollar amounts involved. And so if you are unsure about fixing those previous years before filing this one, reach out to me. It's something I assess privately because, to be honest, Canadian crypto taxes are all very different. Now, let's just say that you have gathered all your records, you use your crypto tax software, everything looks good, right? You are ready to file. Well, almost. Remember step 1, is it taxable? Well, in Canada, crypto can be taxed as capital gains, business income, or both. So which applies to which transactions? And here's where it gets really confusing for most investors. The same token can be taxed differently even within the same year, and it can flip between business income and capital gains year to year. I know you're thinking, what? And it's because in Canada, crypto is considered a commodity and not a currency. So let me give you a really simple example. Say you're staking ETH and you're earning regular rewards. You didn't sell. The rewards are also in ETH. So most investors think, hey, no sale, no tax, right? But here's the kicker. You're actively engaging in activity capable of generating profit with the intent to earn income. So even though you didn't dispose of the ETH, the moment those staking rewards hit your wallet, it's considered business income. And it needs to be reported in that tax year. Now, let's jump ahead to next year and you decide, you know what, you're going to stop staking and you want to decide to sell half of your ETH holdings for Canadian dollars. Now, this time it's going to probably trigger a capital gains or loss taxable event. It's the same token, different tax treatment, different year. And if you're doing this across multiple tokens, multiple exchanges, and multiple wallets multiple times a year, yeah, I know. You're starting to get it. It's going to start to get really messy real fast. And that's where my team and I come in. We help high net worth Canadian crypto investors streamline their records and stay CRA audit ready. You get to stay in this crypto space, trading, discovering projects, making moves, and we handle the boring tax part. You get peace of mind knowing your filings are CRA compliant and built to withstand an audit. So I'm actually curious, what stresses you out more? Is it missing cost basis or messy records or completing the crypto tax return itself? Let me know in the comments. I'd love to hear from you. Okay, now we're going to move to 3 pro tips that most investors don't know about. First pro tip is crypto gifting is not tax-free. Sending crypto to someone, even a family member, counts as a taxable event. And I've got a full video that explains how crypto gifting works in Canada, link in the description. Number 2 tip is report your losses. If you lost money, still report it. You can carry those losses back 3 years or forward indefinitely and reduce future gains. That could be a lot of tax savings that you're missing out on if you're not reporting your losses. And tip 3 is if you were impacted by a collapse exchange such as Celsius, those capital losses could be claimed against your gains. And for Celsius in particular, I have a step-by-step video for you in the description. Now, crypto taxes in Canada come down to knowing just 3 things: what's taxable, gathering your data, and filing confidently. So what's your next step? It's to grab my Is It Taxable free cheat sheet. It breaks down the most common crypto tax transactions in Canada, and it's the #1 tool most of my clients said they wish they had before they filed their crypto taxes in Canada. So you'll find the description for that free resource in the description below. Sorry, you'll find the link in the description below. Until next time, I'm Charlene Tessier. Here's to more crypto profits minus the tax stress.